Bill, thanks for coming on my show, even though I'm going to argue with you here.
It's all right. They forced me to.
The oil markets are rigged?
Look, I'm a simple man. You've known me for a long time. And you wouldn't dispute that I'm a simple man, right?
No, especially when it comes to this.
Here's the deal on the futures market. These guys sit there. They're little gnomes. They're hunchbacks, okay, like this. And they sit over there, and then they bid the price of oil up. And then they buy and they sell. They never put up any money. Don't have to do that, all right? So they can do whatever they want.
They put up a fraction of the money for the total
nothing,
oil.
I mean, nothing like you and I would have to put up buy a stock.
The president says it's not supply and demand, it's manipulation.
He's
you agree?
Right. He's absolutely right. I have talked to every single oil expert, and they all say there's plenty of oil in this world.
The solution is to ban the speculation?
They have to put up 50% of what they speculate.
Which would strongly limit the amount of trading.
Yeah, the gnomes would get even gnomier then, because they could lose a ton of money. They wouldn't be playing on this. And then I think the federal government should tell the oil companies, you have to explain why you're charging what you're charging and why you're all charging the same.
It's not supply and demand, it's fixed.
It's rigged. It's a difference. It's rigged, all right? They know how to play the game. They know how to manipulate the prices up and down. They do it within the letter of the law. They figured it out. They got all these lawyers saying, you can do what you can't do, all right? But it's definitely rigged.
I think you're wrong, but thank you for being on my show.
But look, if I'm wrong, you present me the evidence, and I'll admit I'm wrong.
Well, we'll get to that. But first, this book with the subtitle about the people who hijacked the world's oil market concludes that O'Reilly is basically right. Hijack the oil market, that deserves some ominous music, which we just added. The author, Leah Goodman, joins us now, along with economist Don Boudreau. So, Leah, I'll start with you. Hijacked the oil market?
I wrote this book to show that when you close the door and let traders do whatever they want, and you don't raise that curtain at any point, this is what happens, and the book gets very deep into
What's what
culture.
happens? That the prices fluctuate more?
That you have people who can have kind of incredible control over prices, a very small group. And in my book, this small group of people were often inebriated or high while trading oil, and this was while we saw prices go up to $147.27 in July of 2008. And the stories behind that
if they were high, I bet they lost a lot of money.
Well, you would think, right? But a lot of times when you're bolder, you will take bigger bets. And if the market is riding on an upward trajectory, you can make a lot more money if you're going to be bold.
And so what you and the people on the street and Bill O'Reilly are saying is because of this wildness, prices are higher.
There's a lot more opportunity to push prices up, also down, but generally you make more money when they're high.
Don Boudreau from George Mason University. Most people agree with her, is the impression I get, that the fix is in.
Yeah, most people are wrong in that case, including O'Reilly.
I have such an unusual audience.
By the way, I mean, you say I'm from George Mason. Learning this, I may quit. I may become an oil trader because if all my fellow oil traders are inebriated, I can clean up and make a fortune. So yeah, they're wrong. Look, speculation, and virtually all economists agree on this, no matter where they are in the political spectrum. Speculation evens prices out over time. You can't make money speculating if you don't get it right. What speculators do is take supplies from periods where they are relatively abundant, and they move those supplies to periods where they are relatively scarce. And so that causes prices to even out over time. If you get it wrong, you lose a lot of money.
Sounds good, Leah.
Well, I think I do think he's drawing the picture of what ideally speculation was introduced to do. Unfortunately, we have a very high oil supply and high prices. We're at the upper limit, so why prices keep rising when supply keeps rising?
How do you know we're at the upper limit? I mean,
the U.S. releases inventories every week and lets us know exactly where we stand versus historical averages, and right now we're at the upper limit. And
of supplies.
Yet prices keep going up, so that's an interesting situation why prices keep going up as supply rises. Now, in addition to that, we have 3 times more speculation than we did before the last Iraq war. We don't have 3 times more oil to trade. So do you want to buy a car when 45 people trade it before you and then you get it? I prefer to have fewer middlemen myself.
Don?
I don't even understand the argument. I mean,
What don't you understand?
I was having trouble with that one myself.
I don't
That's what
understand.
speculators do, you know. They're trading
Oh, I
well.
see. The 45 speculators, they're each taking a little piece of profit,
Well,
and then everything costs more.
Some of them will take a loss, but ideally they want to, each one of them get in because they think they're going to take a profit. And hopefully they do in their case.
I just can't. I don't understand the argument. It doesn't.
You're not aware they take profits on some of their trades?
They take profits if they speculate right. If in fact the supplies of oil in the future are lower and the prices rise, they sell at a higher price and they profit. If they're wrong, they lose. By the way, Bill O'Reilly was completely wrong on that. He's talking about these speculators as if they can do it free of charge or at very low cost. If the speculators speculate wrong, they got to suck up their entire losses. It's not as if they can speculate and not put their assets at stake. If they get it wrong, they lose, and they lose big time.
Leah, you say we have this big problem. What's your cure?
Well, I think Bill O'Reilly mentioned, and I agree with him on this, you shouldn't be able to put down a tiny fraction of the overall
50%
value.
margin. How about
if
limits
I'm betting, I shouldn't have to put down almost nothing and then take out $1 billion trade.
If the
that to me
futures
doesn't
markets
seem
are a
right.
problem, why don't we just ban the speculation?
Well, you don't want to ban speculation. I mean, speculators
Good.
play a very useful role in the market. If I'm an oil driller and I'm going to drill a well that takes 10 years, I want to know that going into it, I'm going to get a certain amount per barrel, right? I need to know I can finance that giant project. So the futures
I'm
market lets you do
relieved
that.
even you don't want to ban speculation because some people do, you know, and the government has banned speculation before. Our protectors in Congress once said that speculative activity causes severe and unwarranted fluctuations in the price. That was the Senate Agriculture Committee in 1958. The senators were very upset about the rising price of onions. So they completely banned speculation on onion prices.
And you still can't trade them.
And you still can't trade them today. There's no futures market for onions. So what do you think happened? What do you think happened? But here's what happened. Look at this graph. Prices became more volatile after the ban. And this year, the price of onions rose more than the price of gasoline. So I think some people just don't get futures markets. They really help. And once Congress does something stupid, it stays done stupidly. And onions cost more because of it. I would also like to say everyone also complains about oil companies making windfall profits. But this graph compares oil company profits on each gallon of gas to the government's cut on each gallon. 7 cents for the oil companies, 48 cents for the state. That's taxes. It's a good thing to remember. I'll give you guys the last word here.
Do you want to go?
Oh, look, speculators are the modern day witches. In the past, when things happened in society that people didn't understand and didn't like, they blamed witches. Now, when things don't happen that people don't like in the economy, they blame speculators. You see, because they're kind of shady. No one really knows it. No one goes around with a letter in their head saying speculator. So it's easy to blame these unknown people. And that's what happens. It's politically convenient for the president to blame speculators. It's politically convenient for Bill O'Reilly to do it. It's just not right.
On that note, thank you, Don Boudreau and Leah Goodman.